Okay, record button's on. Someone posted a question about lot size progression.
Yeah, yeah.
Okay,
I've been I've been working. Also, Michael has with entries, which it's basically some dollar cost averaging uh, type of thing, and so there's a maximum number. Well, I suppose there's not, but everything I've tested, there's a maximum number of potential trade entries on any given situation.
now,
So,
what do you mean by that?
uh, all right. Well, now we're using this indicator called, with the fancy name, it's called quantum, but it's nothing more than an elaborate zigzag in which, whereas a zigzag, it'll make a swing, and then the next higher point, it moves the swing up there. This indicator will um, leave a mark there. It leaves a little square box.
Can I give you control? You can show it to us so I can get an idea what's going on, or if you post it,
Yeah,
I'll
yeah.
drop it in this. Um, oh, I will, wait. Let me give you control first.
All right.
I'm going to make you presenter.
Okay. There's danger in that.
Um,
Daryl, I think you ought to preface this by saying you need a decent size account and even bigger balls.
okay, you're talking about that thing you sent me where the guy puts a trillion lots on a trade at some point if
Yeah,
it
yeah,
goes against him.
Well, yeah, something
yeah.
of that
I've
ilk.
I've, re, I've refined it beyond there, but
A trillion and a half.
yeah. Well, okay. So, like for instance, this is the this is the biggest one that I found right here.
Okay, I made you presenter, but I don't see your screen.
I do.
No, you
Oh, I
don't.
see. I have to move one of my charts out of the way.
I can
Okay,
see Daryl's
okay.
screen. Yep.
All right, I see it now. Yes.
Yep.
Yeah, get your butt out of the way and you can see it. Okay,
Okay.
no.
So now these squares I'm looking at here.
Yeah, let me
Oh,
enlarge
you
this a
can't
little
see
so you
my
can see
mouse.
better.
Okay.
Okay, so pardon my slow-moving chart here.
You need to scrunch it up a bit, Daryl.
Well, okay, I just wanted to make it a little bit more visible, but you can see all of them right in here. Okay, so these little red square boxes, maybe not the best color for here, but
That's good.
these little red square boxes are where the zigzag has been, uh, and these can change based on the settings, which doesn't matter much from here now.
You say
So,
it's where zigzag has been.
yeah,
Okay.
so so I mean, all right, so well, I don't want to bother, but you get the idea. So, zigzags maybe comes up here, draws a line right here, and then comes down to the next one. Well, there is no down to the next one. It's only up to the next one. So each incremental higher position, higher bar on the chart, it goes higher, and then higher yet, uh, until it goes low enough to make a blue colored box, meaning you don't want to go long. Okay. So, anyways, this was the most challenging one because of all of the entries. And what I'm currently working with now for a stop loss, not a stop loss, but for a target. And the target, okay, I don't want to get in that deep. I'm just curious is if you had any information on if you are going to continually to take positions that are running against you, at what point would you increase your lot size? Do you have any experience with that?
Well, I have never been a fan of this type of method only because of the account size you would need. And
Exactly.
there's something called the Max trading system or Tiger Max. It's got a couple of different variations out there. But what they do is they pile on in what they believe is the direction of the trend. Okay, and this is a
Okay.
little bit different because you are piling on in the direction of the trend, but there's no stopgap if it goes against you. So then what you would have to do then is take your the maximum lot size or the maximum dollar amount you'd be willing to risk on a trade.
Right.
All right. Then you take the smallest increment your broker will let you trade, and you divide that into your maximum lot size, and that will give you the number of positions you have to play with. Otherwise, you'd have
Okay.
to have a bottomless account.
I
Right.
think you might run
Follow
out
me?
of positions as well, Daryl.
Pardon, Michael?
I was going to say you might run out of positions because your trouble is with this system is you don't know how many boxes you're going to get, do you?
Right. You can't plan for that. And if your
You can get
system
three
only,
or 300. So
yeah, so suppose your lot size only allows you a combination of your risk and your lot size and your broker, you can only risk, let's say, 200 mini lots at a dollar a pip. You follow
Okay.
me?
Hmm.
And then how do you break that? You do one lot here, or you can't see my mouse, but there's a button for that, but I'm not going to look for it. If we start at the very far left-hand side of the screen, you have those three dots, those three squares in a row, far left-hand side.
They're down here?
Right.
Okay, there's actually four there, but go ahead.
Well, I just wanted to pick that three so we have the same spot to
Oh,
look
okay.
at.
All right.
Start there. That's one, two, three, four. Then if
Hmm.
you go up 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So you've got 24 entries. And the only safe thing you certainly can't martingale there because you'll run out of martingale room if you've only got 200 positions to work with.
Right.
You'll run out over here someplace in a hurry. So the only logical thing you could do is make sure that the total of your losses, if it should happen, would equal your risk amount for the day or for the trade. That's the only mathematical progression that will keep your account live.
Okay.
Now you won't be able to work the system with the fluidity that the author does, and I don't know what the author's doing. If he has a demo account, I'm assuming he's doing a $100,000 demo.
Well, number one, he's using 400 to 1, and he hasn't said his account size, but I'm assuming for his live account, it's got, plus he starts with micros.
Okay, so
It's got,
that's 1/10 again. Okay.
it's got to be at least $20,000. And, but anyways, so that's his thing, and he does take every box, every red square or blue square if the price is going down.
yeah, I was just going to say that, Daryl. Before Lou has a heart attack, I think you ought to explain to him that you don't take every red box.
No, I don't. That's what these white vertical lines are for.
And what
And
are you
they're
taking? Just the first new one?
no, no. Here's what you can see in the bottom. I have an RSI 14.
Or you're taking the oversolds? Okay.
Not all of them.
Overbought,
Okay, so
rather.
what I've discovered on this, see, I've got these blue lines that are in kind of unusual positions. 73.5 for the overbought, and 26.5 for the oversold. So here's what I'm doing with this one. Okay, so I never take I never take the first one that reaches that. Okay, in this case, here's the first sign, or the first RSI plus a box. It has to also have a box that reaches 73.5 or better. Okay, I never take the first ones because they'll always end up, not always, most of the time they're going to end up in the red. Okay, and in fact, then I wouldn't even take this one because, all right, so there's 14, no, there's 9, there's 10, okay, that's okay. But between this one and this one, there's, okay, it's catching up here, come on, motherfucker, Jesus Christ. All right, never mind. So this is 20, okay, anyways, I know because I measured this before, there's 14 minutes, these are 1 minute candles, 14 minutes between this oversold and this, overbought, and this one overbought. Okay, so I'm limited to 10 or 11 at the max. So in other words, if this distance from here to here is more than, say, 11 minutes, I don't count that as the second in the series of overbought.
So how many minutes are you counting?
Counting it would be anywhere really from about 3 to maybe 11 max, where I would count it as another oversold entry. So technically then this entry would be right here because these are both oversold with a dip. Okay, so this would be the second entry. This is the first, no entry taken here. This is the second, an entry taken here. And then another entry taken here. Am I confusing you yet?
No, I wouldn't have taken that second entry, Daryl, because you got divergence there. So it was...
What?
You're saying that you have divergence there on that second entry.
Oh, from here to here.
Yeah.
Yeah. Well, okay, so anyways, yeah, I understand what you're saying, but I mean, even if it is going down, well, that's what I want it to do anyways, right? So if this is divergence and it does go down, then I end up hopefully in a winning position right away. Anyway, so now I'm already in this trade. So now I'm in at subsequent entries that rise above the 73.5. And here's, okay, so right now, my exit on these, this is the 60, this white line right here is the 60 EMA. This is my exit. So I don't exit until then. I would keep taking entries.
What is your exit?
The 60.
Oh, and what's the yellow moving average?
Something I'm playing with right now. There's also an incremental increase. Okay, so from this one right here, I have price goes up about 15, 16. Well, here's what I'm thinking is I've looked at a million of these, well, at least a few hundred, and what the average run-up is before there's a retrace back down to, like, say, the 60 is maybe 17 or 18. So this is a case where this one runs extremely negative, which hasn't happened yet on anything I've checked out, because it doesn't come to the 60. Well, I'm within 1 pip of the 60 is where I would take an exit. So that happens right up at here, and with my spread, my cutoff is right about at this point. So like this one down here is 28, 20, almost 29 pips negative, and this one is like 18 pips negative. So, okay, but I'm kind of getting lost on this stuff here. There's a lot of stuff to consider. So, at any rate, what I'm doing for right now is if it does get to this many entries, and this is the only time that it has, is entries 1, 2, and 3 are single lot. Entries 4 and above are double lot. So this trade actually ends up, I forget. I mean, this one, it was actually a loss overall by the time it got back to the 30, but it wasn't significant. I might have been 18, 19 pips, whereas the average win doing this is probably about 15 or 16 pips, but there's, a lot more. I mean, it's rare to lose on this. This is only the second loss I've seen, and the other loss that I had on this was 1 pip or 2 pips.
Now, did you actually take the trades, or are you just eyeballing this?
Well, this is according to Precise. No, this is this is mostly demo stuff. I have taken some live stuff, but it's mostly or not demo, but mostly just back testing this. And of course, back testing, then you have precise entries, whereas when you're in live, your entries aren't going to be precise because you're taking them manually.
All right, I see a couple of things that I may do differently, but to be honest, I would have to go back and revisit. You gave me the link for this, right? It's in Forex Factory.
Yeah, the thread author's making a bomb out of it, but he's got a big enough account to do it.
Yeah.
I'll have to go back and revisit it because I see things a little, like if you look at all these red squares, now I don't know what the stop loss is, but as I'm looking at this, and again, I have to go by how, my eyes see things, but every time I get a red square, I would go long on the next candle. You follow me? And I would hold.
Okay, yeah.
And go ahead.
There's guys that do that, and that might be the correct solution to this too.
Yeah, and then what I would do is I would wait for an exit below that yellow moving average, just as an example. Not saying that's exactly what what I would do. So your first square at the far left-hand corner, I can't measure it, but let's just go take a measure on that.
Sure.
And assume we entered at the open of the candle after that red square.
Okay.
And then we go to that red candle that closes below the yellow moving average. Follow that up.
Closes below?
Yeah, there's a red candle right in the middle of the screen that closes below the yellow moving average.
Oh, over here.
Yeah.
Oh,
the one before it. One before it.
Oh, here?
Right.
Okay.
There's a little bit of a delay. How many pips is that?
Well, I'm waiting for my thing to catch up. 22, less the spread.
So let's call it 20.
20.
Yeah, call it 20. So those 3 trades right there will give you 60 pips. That higher candle in that same cluster, let's assume that would give you 15 pips.
All right.
All right. And then 15 on the next one, which is that short cluster of 3 going up in a row.
Over here?
Yeah, let's say 15, 14, and 13 pips on each of those. I'm taking spread out. You could measure it just to.
Okay, yeah.
Take the middle one, and we'll split the difference.
All right, well, let's just say it's 15.
Yeah,
well,
I figured 15, 14, 13.
13.
Right, and then the next 4, I would give an average of 8.
Mm-hmm.
that next four, I would average out at 8 pips profit.
Okay, that's about, oh, and that's actually about 3 each.
Okay, okay. And then now you're going to have the two losers here. Those next two
Okay.
candles, there are losers. And how much are those?
This would be a spread 9 plus 12, so it's 21.
So you lose 21, but in the first three trades at the bottom, you made 60. And then you made another 15, so that's 75. And then you made that 13, 14, 15. So maybe doing it that way may be more traditional, but easier to take account of.
Huh.
Yeah,
Yeah,
it's
you
just
know,
the
there is a
exact
guy.
opposite of what the thread is, isn't it?
It's what?
It's the exact opposite of what you're supposed to do.
Well, yeah, I know. I know what the guy is doing in the thread, but
Yeah,
you
yeah,
know, I have to look at what my account size is, let's say, and
yeah,
what my
yeah,
risk tolerance is, and does this make any sense?
yeah.
Mhm.
So if we took the next cluster of candles, let's just try that and average
Okay.
those three out is what? That's say 15 each, so 45.
Okay.
And then go up to the next one, it's probably 5 each, the next three.
55, yeah. Okay, so 50, 40, right, so we're up to about 50, 55. And then this one is -6, -11. Yeah, that's pretty cool, Lou.
Since it's
Just needed a
marking,
fresh set of eyeballs. That's what you provided.
okay, no, I'm not trying to change your system. I'm not trying to say it's bad
No,
or
no.
anything, but I do need to go and actually look at it carefully.
Yeah,
But
there is somebody actually on the thread who's actually doing what you suggested, Lou.
oh, really?
Yeah,
I think there's
Octave
somebody on
J.
there who's doing the exact opposite. Yeah.
Yeah.
Octave J is his name. Anyways, so yeah, that's pretty good stuff there. Lou. Now this is an atypical move. Okay. Um,
I was going to ask you
let's
about a choppy market.
yeah. So okay, so here's a choppy market, right? Um, and all right, let's see. For instance,
Well, you
all
have
right. So
one
these
blue square at the bottom there.
right, yeah. So
That
on a
would be a
blue
long trade
square, well,
or a
yeah,
short
but the
trade.
rest were long trades. Remember?
Oh, yeah, the reds are
So
long, so
this would
these would
be
all be short trades.
these
Yeah.
would be short trades, and so this one on the close to this first line here, you'd lose about 8.
All right, that's not a big deal at all.
No.
Oh,
So then, on the run-ups, okay, yeah, on the run-ups, this makes a big difference. Now here's another extreme run-up. This happens to be this particular day, which is
well,
the
remember,
8th.
it's not an extreme run up on a 1 minute chart. That's pretty typical for a 1 minute. It's just that we're not accustomed to seeing it. You get what I'm
Well,
saying?
yeah, well, I mean, this is 50 pips right here. Well, actually 60, a 60 pip run-up. So that was
All right.
pretty extreme.
So what I want to do here real quick is look at the bottom of the candle that closes below the moving average, the upper moving average. Oh, go back to, yeah. Put a
All right.
horizontal line at the bottom of the candle that closes below the yellow moving average, up at the upper right-hand corner.
Oh, okay.
Right. Put a
Uh,
horizontal line there.
all right.
Okay, so every square above that line is a trade that was not a winner. Okay.
Yeah.
So let's just take an average of how much those negative trades were. There's a delay. I see you're trying to change the color of something. So I'll
Yeah.
wait.
We can see the line, Daryl.
Yeah, we can see the line, yeah.
Yeah.
So let's take
Okay.
the two largest losing positions there, right
All
at the
right.
very top. How much were those losses? And we'll do an average of the two.
All right. About 10 each, 11 each.
That's
Well, actually,
20.
the spread 12 each.
Okay, and let's do an average of the next cluster of 4 or 5.
Okay, about, oh, wait a minute.
No, you got to go from the,
Yeah, so there'll be about 5 each.
so 5, 10, 15, 20, 25, and then the two tens, 35, 45. So we'll say we have 50 pips of losses there. All right.
All right.
Now let's take our first square in that run up
Mm-hmm.
and let's measure that out to that close. That's
32.
let's call it 25. And now we'll take,
Well, it's going to be 30. It's 30. Oh, I see, for the cluster.
yeah,
Yeah, we'll call it, okay, well, yeah, okay, maybe 20. Let's call it, well, 25.
we'll call it 20 then, if you want.
All right. Well,
So we don't have
well,
to
20,
measure every one. You know what I mean?
okay,
So you
20,
got
20,
20, 40, 60, 80,
26.35.
100, 120. You got 140 in winners in that first cluster,
Mm-hmm.
averaging a 20. Then we have the second cluster after the first pullback. Those three. You got to measure up
About,
to your. You got to measure up to the close
oh, yeah, yeah.
or down from the close, either one.
Yeah,
And
so
we'll call
about,
those tens.
okay.
So that's 150 pips in winners we have so far.
Mm-hmm.
I lost count there. 20, 40, 60, 80, 140, and then three 15s.
Yeah, yeah,
Okay.
I see.
It's going to win overall. You can see that.
Right.
All
I'm
right.
just trying to see if this makes any sense because these zigzags appear to kick in at the start of a trend. Or not at the start of a trend, but they seem to kick in once a trend has progressed. Can you roll back a little bit? You see where we have a crossover of the two moving averages at the beginning of the blue box, and once that trend is established, that's when we get our first blue square. No, farther back, farther back.
Oh, over here?
Right.
Okay.
So these zigzags appear to show up after a trend is established, and just on a quick look-see, it looks like it's after the first pullback. You see that where we have the cross on the left-hand side, and then we have a pullback into the moving averages, and then on that next leg down, it gave us the blue box. Then we look at the next cross, a little farther over in the middle of the screen,
Yeah.
and then we have a significant pullback toward the moving averages, and then we get a red box.
Mm.
So that appears to be, I'd have to look back, you know me, I got to look back over 100 boxes. But if that's how this works, and if this thing does seem to be able to catch a trend once it's taken off, then there may be another way to trade this. But
Yeah.
can you roll back some more? I want to see if that kind of holds true.
Well, excuse me. Let me go forward because this is the London sessions. Let me just go
Oh,
forward.
okay, yeah. I don't know where you.
Yeah. So
You
this
had loads of
is
winners on the traditional there, didn't you?
what's that?
Said you had loads of winners doing it as per the thread, didn't you? There.
Yeah. So here is the start of the blue box is 8 o'clock, New York.
Okay, I just want to point something out. You see right in the black area where we
Yeah.
have the cross long,
Yes.
okay, and then after that there's a little bit of a pullback, and then we get a red square.
Yeah. Yeah. That's
And then
yeah.
if you look at the cross short, we don't really get a pullback, but we get a significant move down, and then we get the blue square. That's kind of what I'm looking at. So this thing may be picking up on the second and third legs of a thrust up or thrust down.
Wow. Yeah.
All right, maybe something maybe they're unaware of. And then if we look at the cross in the blue box where we go short again, and you see we have a significant pullback into the moving averages, and then we get our first blue square to go short.
Yes. Okay.
So if you remember, my definition of price action is the natural movement of the market made up of consistent, repeatable patterns. So
Yes.
I'm always looking for what's consistent, what's repeatable. Almost every time we get across those two moving averages, and you could have picked them by luck, but every time we get that cross and a pullback, we start getting squares in the direction of the trend. Because apparently it seems to be picking up the trend pretty well.
Yes.
Now,
Yeah,
this
Darren, if you could scroll back a little bit to where you were just now. A bit more.
A little more.
Right, okay. So playing it as the thread was set up, you've got that one blue box down there, haven't you, which is a long, yeah?
Oh, that's a short.
Yeah, the blue boxes are short. The colors are backwards here. It's
Well,
not
I'm talking about
backwards.
doing it as per the thread. So that the blues are short and the reds are long on your system?
No. What Lou is talking about switches.
No,
Yeah,
no,
no.
no.
I'm saying the way the thread was set up. Yeah.
Oh, well, yeah.
That blue is a long. Yeah.
Yes.
Okay. And that was a winner. You got a red box closed at a winner. Yeah.
Yes. Yes.
Right. Okay. Then if you took every red box short after that, every single one of those would be a winner at the opening of the first blue box, wouldn't it?
Well, in this case, yes.
In this case, yeah. Yep. But Lou's given an interesting perspective on that.
Well, yeah. I mean, with what with the way the thread works, you're taking a whole lot of heat before you see.
You sure are.
Yeah. So that's where flip-flopping this makes a lot more sense.
Well, it may not, because I need to see the indicator and I need to look at it on a bunch of other charts.
Mm-hmm.
But
Well,
just
plus the setting on this indicator is quite flexible. So on the thread, what they're using for this setting is a 325 for prime time. So that would be London, London, New York. A 325, which makes a lot less boxes, a lot less. So this blue one down here probably wouldn't exist at a 325. But 95 is what I've found to work with what I have been doing in all time frames, and it also gives you more boxes. So,
do you have the source code for that indicator? Yes,
well,
you do.
it is MQ4.
Yeah, so you have it. Okay, I mean, this is something that could be automated.
Okay.
Now, on the thread, based on the thread, we're short on the blue boxes, right?
No, long.
Oh, we're long on the blue boxes, and we exit on a red box.
Yeah.
Correct.
So let's see where this next set of blue boxes would have left us.
Okay.
Because it'll have to be at a crossover. Okay, so there it is. And then again, there's that phenomenon. We have the crossover to go long. We have a pullback, and then we get the first red box.
Yeah.
That's that repeatable pattern I'm just trying to see.
Mm-hmm.
So these are all short trades, am I correct? The blue boxes.
Well,
No, they're long trades.
What you've done, yeah.
No. The way it's written, these are long trades.
Yeah.
These are long.
Oh boy, you take a hell of a lot of heat. Yeah. And now, is he when he gets to the bottom blue box at the bottom of the chart, is that position like 8-10 lots, or is it one lot like all the others?
Well, his first 20 positions. Let me be fair and change this to the same setting he uses. The first 20 positions are single lot.
Okay, the first 20 positions are single. I would have to read the thread, but I'm just trying to understand what the.
Sure. It's on the first page.
Daryl, before Lou has another heart attack, you ought to say that the thread author only takes boxes which occur between 5 a.m. and 8 a.m. London time, doesn't he?
Right.
That's all he does. Others do it differently, but that's all he does.
Well, 5 a.m. and 8 a.m. London time, the market's not open.
Well, that's what he's trying to catch, I believe. A quieter period in the market.
Okay, more stable price action. Okay. All right, so he's got 3 long trades on the blue boxes.
Yeah, so
Gonna,
this is the settings according to the thread. And I'm just trying to crunch it in here a little bit. Okay, so now
Everyone a winner.
This is London closed into the blue box.
Yep.
But you know, most people aren't trading here. They're only trading from about right around in this area.
Okay, and I don't see a blue box anywhere there.
No. So
To take a long trade.
He's going to take the first change in direction, right, Michael?
Well, he takes the first box that appears between 5 a.m. and 8 a.m. London time.
Okay, so that's going to be somewhere right in here. So yeah, this would have been a tough day. In fact, I think this was 2 days ago. This was a tough day. So he's starting to make entries right around in here, and there's no blue boxes for quite a while here. In fact, there's none. Right? Over here. Let me put a line here.
Now I just have to reverse my thinking now. So these red boxes are all shorts.
Red boxes are all shorts.
Okay, and he exits on a blue box. So that cluster at the top should have been a winner.
Yeah, all of these from about here, where I've got this mess of white lines, but
yeah,
from about here, we're starting to be winners. But all these down here were losers. So let me scrunch it up a little bit more.
And that's with the 395 setting?
325.
325.
Yeah. So we're starting about, let me see, this is 8, 5. You said not 5 London, is that what you said?
Between 5 a.m. and 8 a.m. London time. Yeah.
Right. He's right between near the close of Asia and the open of London.
Okay, so 5, 8, 10, 3. Okay, so 3 hours previous to this 10, so 7. Come on, move, motherfucker. All right, so right about here is when he's going to start. Oh, jeez. Yeah, right about here. So then got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Well, okay, let's just go with 16 up in the loss for sure. 16 or more, something like that. I mean, yesterday he showed 40-some trades, I think.
Darren, if you want to be fair to the thread author, I can give you some stats now that Lou can listen to.
Oh yeah, that'd be good.
Right. So the first 20 trades are taken at one lot. From trade 20 up to trade 30 are 2 lots.
Ooh.
From trade 31 up to 40, up to 50 are 5 lots, and then after 50 it's 13 lots. So you can see he's actually martingaling, but the interesting thing is the cumulative number of pips from the start of this thread, which was the beginning of August, it's not that long ago, is 41,055 pips without a single day's loss.
Okay, I can see that. So now when he gets to this cluster up at the top, these are all the maximum number of lots. Oh, you can't see my mouse, but the 2 clusters at the top in the blue boxes, those are each, what's his maximum number of lots?
So 50. Far, 1.44 lots.
No. So now, Tony, what was the maximum number of positions, I should say?
Oh, I've just closed it out now.
Oh, okay.
Yeah.
Because you said it was 1, 2, then 3, then 5.
Yeah, 1, 2, 3, 5, and then 13, I think.
Okay, 1, 2, 3, 5, and 13. So all of those are 13 lot positions.
Micros.
No, I understand that. When I say lot, I mean a single position.
Yeah.
So it's
Okay.
13 positions at whatever dollar increment. So
Right.
I could see where that would make up for the prior losses over in the gray box, because the prior losses are all singles, and then by the time he gets to the 13s, 113 would eat up 5 or 6 of the losses in the gray box. You follow me?
Well, yeah, yeah.
I didn't know his lot progression was that aggressive.
Well,
That is
yeah.
a
In
little bit
fact,
scary.
if he gets to, what is it, 60 or 60 positions or something like that, it's now 144.
When you say if he gets to 60 positions, what do you mean? 60
Well,
new
60
trades?
entries.
Oh yeah, but
Yeah,
each entry will have a different lot size.
right.
Yeah, so okay, so 60 entries. If he's going to give himself a maximum of 60 entries and aggressively scale his lot size in so that like each of these entries in the middle of the screen is about, I don't know, 10 of them. Each of those has 13 units on it. Then I can see where this makes sense. I just don't like the amount of heat you'd have to take.
Sure.
Yeah.
But if you're trading zero point zero 0.01, which is micros, which is a penny a pip, well,
No,
at 400 to 1, if
10
he's
cents.
trading 400 to 1, he'll get 10 cents a pip.
He is trading 10 cents a pip.
Right.
Yeah, 10 cents.
Yeah, so at 400 to 1 with that, yeah, you will get 10 cents a pip on it. Then, depending on the lot size, the heat may not be that bad. But I can't get 400 to 1 here, so, but
Yeah.
it makes sense. I can see where it makes sense. I just, that piling on the lots at the top is something I'm not accustomed to. That doesn't mean it doesn't work. It's just something that I haven't done before. I prefer that the other way. If you go back to the 95, and that kind of fits my eyes better, but I'm actually going to look at both of them. And yeah, if you go back to the 95, and if I start now, again, this is me, I would just start taking every one of these until I got a close below. Let's take the blue box in the middle. I would take every one of those red boxes long until we got a close below the moving average. And again, I know you just picked the moving average, you were just experimenting with it, but there may be another moving average, or there may be another uh, way to pick a mechanical exit. You follow me? So
Yeah,
those top 3 trades,
I do.
so there may be
All
a
right,
way
I'm
to
going to
do both.
switch. I'm going to switch to a more. Oh, this isn't really more
Well,
than.
don't cherry pick, Daryl.
Well, yeah, I mean, because we get a lot of range stuff in the pound, and it hasn't been
Yeah, but don't
doing that
cherry
the
pick.
last while.
You got to deal with whatever's on the chart.
Yeah, yeah, but I'm looking for more of a give and take day. So this was prior to non-farm payroll. So this is kind of all right. This part right in here is a little bit back and forth, but yeah, it still looks pretty good on here.
Now, yeah, and again, you see the cross in the middle of the gray box, the pullback, and then we get that first red square.
Mm-hmm.
That first red square, just that first red square alone seems to be a pretty good winner after the crossover.
Mm-hmm.
If I only took that and then worried about an exit later. And you see, if you look in the black area of the screen to your left, you have the crossover short. And if I take the first blue square and worry about the exit later, that first blue square would be pretty decent.
Yeah, yeah, it would be.
So there may be a way to get, a little bit of both out of it, or create something that's
Yeah, Lou, this system's got one huge downside.
and that
There's no
is,
there's no stop loss because you can't know your stop loss.
oh, yeah, we didn't even discuss that. Yeah, if the computer
You've either
shuts
got to have
off.
an emergency. You've either got to have an emergency stop loss, which will cover heaven knows how many trades if the worst happens,
Yeah,
or you're just leaving it to chance. And I can't see you particularly just leaving it to chance, Lou.
no, no, that won't happen. Absolutely not. The only reasonable stop loss, again, this is where doing the math would come in. If all those trades did go south, uh, what would the dollar amount be that I'd be comfortable with the system? Now, if I work with the system enough and I get comfortable with it and see it, then I would come up with a number that would be based on, and I'll talk this through carefully. The reason I do 100 trades on any system is that, or 100 days, is that you get 1/4 of all the different news events. You get 1/4 of the banks talking and the talking heads. So you get a good range of what that pair is likely to do during that course of 100 days. So if during the course of 100 days, I see that 8 out of 10 of these clusters of trades do work out, then I know I could give myself a slightly wider stop than I normally would, because the room will be there to get that money back. You follow me? So I would need to know over a course of 100 days, what is the probability of having a cluster of trades not work out, number one. And if that cluster of trades doesn't work out, what's the average loss that occurs? And then I'll pin that number as a potential stop loss. You follow me? Because it doesn't happen that often, and normally you can get that loss back, maybe in 2 trades or 3 trades, depending on how deep it is. But that's how I would determine a stop loss, based on what the chart actually does, and not off of picking a number out of a hat.
The only thing that occurred to me, Lou, is if you look in the what color would you call that? The grey box in the middle there,
Yes,
where the first red square occurs. I
yes.
mean, all those red squares are effectively new swing highs, aren't they? That's what they are.
Yeah, but they're not fractals.
Yeah. They're not
Right.
fractals, but they're new swing highs. So
Yes.
for me, the only I suppose I wouldn't want to enter a trade without a stop loss. So I'd be looking at probably a stop loss at the first swing low below the MAs.
Yeah, or since that first box usually occurs at the heart of a trend, I would put my stop at the lowest fractal, or the closest fractal to that first box.
Yeah.
But again, that would be trading it, with me looking to exit at the crossover of the moving average.
Yeah. Actually, that raises another interesting question, something I heard the other day. I don't know whether Daryl heard it or not, but a guy who was supposedly mentored by Larry Williams, who I know is you're one of his fans, aren't you?
Yes.
Apparently, he said that 5 candles for a fractor is bollocks. You only need 3.
Yes and no.
Well, that's the way he plays it anyway.
Right.
But it's
Yeah, well, the reason for 5 is that the second opening to the left or right is usually an indication of continued momentum, but that's generally on the close of the 5th candle.
Yeah.
So now, if you look at the gray box,
Yeah.
and if you go to your right to that swing high that's up there with the 2 railroad candles,
Yeah.
they're almost identical in length.
Yeah.
Okay, if you go over to the next little swing high, you see there, if we used the 3 candle for the fractal, you would have been burned.
Yeah.
Right. So the thing with the 5, if we go back to the other one with the 2 candles that have the 2 wicks almost neck and neck, you see at the close of the 5th candle, you've got confirmation of momentum.
Yeah.
So now I don't know how he's playing it. So I'm not saying he's wrong, because there's a million ways to do this. But if you want the strongest confirmation, even though it'll be a much, much more conservative trade, you would wait for the close of the 5th candle.
I love that word, conservative.
Yeah. So, I mean, it works. If you want to make
music to my ears.
Yeah, when you want to make. I mean, I've got a lot of guys. Well, let me take that back. I know a group of people. I talk with a bunch of traders, and we have little meetups, and sometimes we meet face to face. And there are guys that, talked about what they did when the crash was coming, and I was telling people back in 2006 that this market is going to tank. It's going to tank hard. But I don't look like a guy you would think would have um, knowledge of those matters, is the best way to put it. So a lot of people kind of just say, yeah, what does he know? Blah, blah, blah. Okay, cool. The other people that know me for a long time, we sat down and talked about, well, what would be the best way to go? And they had much, much more money than I did. But what they determined, based on what I showed them on the charts and just talking, was they slowly moved money in out of their higher risk stocks and equities or whatever, and moved them into guaranteed 3% funds or bonds.
Yeah.
So what happened was they lost nothing.
Yeah.
They didn't particularly keep up with inflation, but if they had like $140,000 in their IRA, they had 140,000 plus 3%.
Yeah.
You know what I'm saying? So
Yeah.
that worked out quite, and it's very, very conservative. 3% is nothing. Wow, 3% annually on top of that.
Mm.
It's nothing to scream about because inflation was kicking around 4%. So if you looked at it from that perspective, how much is my dollar buying power now compared to 5 years ago, 10 years ago? In one respect, you could say you lost a little bit of money. But if you look at the actual cash value of your account, you lost none of your cash value.
Yeah.
You
I
may
mean,
have
the
lost some
dot
buying
com
power.
crash was horrendous, wasn't it?
Yeah. And this recent crash is nothing. This is just a correction. Everybody
Yeah.
got panicked. And I remember telling some guys, look, be prepared for about a 28, 30% pullback at some point. They said, oh, 30%, the market's going to die. What are you, crazy? You out of your fucking mind? Okay, I'm out of my mind. Watch what happens. And we had a pullback. Just a plain, regular fucking pullback. But everyone became, there's a disease that I'm sometimes a victim of. And I call it affluenza.
Okay.
You understand what I mean by that,
Yeah, I
right?
got it. Yeah.
Okay, we're so accustomed to having the good life and things are going good and it's all right that you lose that sense of hunger. That you know what I mean? And it happens to a lot of people. Um, so uh, I try to always catch myself when I see that I've got the symptoms of affluenza. Like if I'm supposed to sit at the computer for 3 hours and study and read, and if I don't do it, because I'm comfortable. Yeah, I can come back to that later. Almost like I've got a switch. I could turn it on and turn it off, but sometimes you can't. Sometimes you just need to be in that grind every day, steady, 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 steady. It's sort of like fishing. Um, you go to your favorite fishing spot, it'll be 3 days, there'll be nothing. And then you go there that one day, and all of a sudden there's fish everywhere. They're damn near following you back to the car. You know what I mean? But you
Yeah.
have to be willing to go there the other 3 days and pick up the subtle signs. Oh, I see like the oceans, the wind's blowing in, or there's not enough sunlight, or, you pick up those nuances. So that's what happens to a great many investors, particularly new investors or investors that rely on somebody else's knowledge, that they get a sense of comfort that's a bit dangerous.
Mm.
So,
Anyway, I love your new perspective on that idea, Lou.
yeah, it's something that I'll look at. But, can you put a MACD up? Because it reminds me of a MACD system that I used to trade. And I
Sure.
stopped, and not because it didn't work, but I guess I got pulled into something else, the flavor of the day. If you just put a standard MACD, and we
Okay.
covered this last year, as a matter of fact.
Before, okay, so this is a much more typical move with the give and take, and this trade would have roughly been a break even by the time it closed back
Well,
above.
we're long on the blue boxes, right? We're in the area you're talking
No,
about.
short. We're short.
Hmm. Okay, I'm thinking upside down. No. The way he has it designed, we're long on the blue boxes.
Well, okay, yeah. Thread long.
Yes.
What you just said, Lou short. Okay. Let me put the MACD up here. You want a 2-line or regular MACD? Does it matter?
The regular MetaTrader MACD, 1226.9, same standard stuff.
Colors.
Yeah, that's all fine. So what I want you to see is now we're going to work in the area of the gray box, okay? So what I want you to see is you see where MACD crosses 0 for the first time in the middle of the gray box?
Right here.
Right.
Oh, right here. Yeah.
Yeah. Now, what you'll notice is that, now let's slide over to where, because it's the same phenomenon all the way across, but let's slide over to the area where the first red box is.
Okay, right there.
Right. What I want you to notice there is that MACD crosses 0, and that's pretty much that's actually the second time, but it's the second time that the MACD histogram goes below the signal line. And that's usually an indication of a pullback. And then when MACD goes back above the signal line again, that's a continuation of the trend.
Okay, which was technically right here. Let me blow this up
Yeah.
a little bit. So
Okay.
better.
So it looks very similar to that with the MACD. Yeah.
I have another chart I could be doing this on, but I don't have it loaded right now. I just take too much hassle.
Well, I can even show you it here too. You don't have to move the chart. Okay. You see where that cluster of candles to the left-hand side is? Upper in the top?
Over here?
Right. Now you see where MACD first breaks 0? Oh, it jumped.
You've got a hell of a delay there.
Yeah,
All right.
that is a delay and a half.
Yeah, so all right, so let's
I can do it here. Wait,
all right.
I'll use this area. So right in the middle of the screen in that black area there.
Mm-hmm.
All right. What I want you to see is you see when the MACD histogram goes above the signal line.
Yeah, right here.
Right. That's the pullback. That's the first pullback after MACD broke 0. You got that?
All right. Yeah.
So MACD goes the other way, but MACD never breaks 0 to go long. Then when the MACD histogram goes below the signal line, if you put your mouse on it, you'll see it'll be pretty close to that first square.
Yeah.
You got me?
You're talking about right there, yeah.
Yeah, well, you can put the crosshair up, and you'll see what I mean. So that's when I saw that, it reminded me of the MACD setup. Okay. So after that pullback, when MACD goes back again short, that would be your trade entry. And you want the first pullback after MACD breaks the 0 line one way or the other.
I see.
You got me? Now, if you go over to your right a little bit, where MACD goes positive again, there's a delay. I understand. You see where MACD goes above 0?
Yeah.
Right here?
MACD goes above 0. No, the MACD histogram goes above 0.
Right here.
Right. Now watch, if you look at the MACD histogram, look at when it goes below the signal line. You see where the histogram goes below the red signal line?
Yep.
Okay, that's the first pullback after MACD breaks 0.
Okay, over here.
Correct. Yeah, there's a delay. And then when MACD goes back above the signal line again, that's when we're off to the races.
Hmm.
You see that? Put your mouse where the MACD histogram goes above the signal line. Now we're long from that point on. Okay, and your stop loss goes back to the last pullback down there, that pin bar.
Yeah.
Yeah.
So that's what those dots reminded, those squares, I should say, reminded me of when I saw where they were laying out. They appeared to be catching the first pullback in the trend. All right. And we had talked about this last year, but I didn't elaborate on it because we were covering a lot of different subjects. I was trying to do like a subject a week kind of thing. But this happens to be really, really good on higher time frames, what I just showed you.
if you were going to use an oscillator on this system, Lou, which one would you use out of all the oscillators there are to choose from?
In this particular case, if I'm looking at using these squares and all that, I would certainly use the MACD, because
Right.
these squares are not based on a range, so you can't use stochastics.
Right.
Okay, they're more based on a momentum breakout, it appears, because they're using zigzag, and zigs only move when the momentum continues or stops.
Yeah.
So the only other one that would make some sense would be RSI, but then I'd have to kind of
That's what Daryl's
custom
using.
fit. Yeah, I'd have to custom fit the RSI, and I'd look for a break of RSI 50 rather. Or I would use the MACD.
Yeah.
Simply because of what it's measuring, the difference between the 12 and the 26. How many pips difference is it between the 12 moving average and the 26? And then when it has that number, it takes 9 periods of that and does an average of the last 9 of that number. So it's giving you a clean look at what the market is actually doing. So
and
now,
what parameter would you use on the RSI, Lou, for a 1 minute chart?
you could take the MACD off.
Okay, well, I'm gonna.
Or just squeeze it down if you want to keep it there just to eyeball it later.
Okay, so I'm trying to do something that won't do anything. Let me get rid of it because it's slowing this down.
Yeah, it's just a standard MACD, so you could always throw it up later. But you understand what I mean about grabbing that first pullback. So what I would want is, let me see, on this, this is a 14. So if you go any faster, you're going to get a lot more crosses above and below the 50.
Yeah.
Okay,
Yeah.
so then you may want to go a bit slower. I would go with a 21.
So here's the first cross below the 50. And this is there's correlations here to what you were showing in the MACD also. This is the first cross below, and then there's the pullback, and then it takes off.
And it's the third, and the thing with stochastics also a lot, I mean RSI, people tend to forget the trending nature of the RSI line. You've got 3 successive lower highs prior to that crossover. So MACD is heading, stochastics is heading in that direction. If you look at the crossover back above 0, you'll see you've got 1, 2, 3 successive higher peak lows.
Okay, in this location or a different location?
No. What I'm showing, okay, you see where you are right now. Go back to the next peak on MACD, on the RSI, right in there.
Right about there, yeah.
You got 2 of them. Now go back to the next peak. You see, all 3, you could put a trend line right across the top of those, and you're making successively lower highs on the RSI.
Okay. Beautiful divergence as well.
Absolutely, yes. Now, if you go back to the other area, if you go back to where the last blue dot is, the last blue square, right there. If you look at RSI then, RSI now made 3 successive higher lows. You see that? On its way to breaking the 50 level. And then it breaks 50, retests it, and then takes off.
Okay, right here.
Right. It broke 50, retested, and took off the same way that short move did that you showed me. But now to go back to a better idea for RSI, then let's make the RSI a 21, because you want to get rid of some of these peaks. You'd rather have fewer peaks but higher probability. You can leave everything else the same. What version of FXCM MT4? Oh, you got an Apple. Okay.
Yeah. Okay, 21.
Yeah.
How do you spell that?
TWEN.
Jesus.
Wow, what a delay on this screen sharing. Unbelievable.
Okay, there we go, 21.
Okay, so it smoothed it out a little bit, but not enough for me. Let's take the onboard MetaTrader moving average indicator and lay it on top of this RSI. So scroll up and get the onboard MetaTrader moving average.
Moving average.
No. Those are custom indicators. Don't use that one.
Oh, all right.
Go up to the traditional. And what I want to do is find a moving average that has nice smooth curves in it. And we're waiting on the delay, which is cool.
It's my fault. I added I imported 1 minute to this platform through. Anyway, so I imported 1 minute. So my 1 minute history was up to 347 megabytes. So that's what's slowing.
Draw it by hand, Daryl.
Oh yeah, and if you guys ever come across any other videos or anything that you think is interesting, definitely drop me the link, because I can't see everything, and we may discover something that could benefit all of us. Okay, so you want to drag that on, and maybe it's because it's an Apple computer.
It's FX. Well, that might slow it down a little bit, but
okay.
Like if I had a Wanda up here, it wouldn't change any. I mean, it would run just like.
But don't worry. Make it smooth, because we want to smooth the smoothest possible line, even though it may be a bit late. We can make up for the difference in the lateness by decreasing the period. So make it a smooth, MA smooth, and then you want to apply it to first indicators data.
Right. I'm just waiting on this thing here. Okay.
Understood. Understood.
Okay. Simple or smooth?
Smooth. Period.
And then hit OK.
Is 21 okay?
Yeah, for now. Now you see how much smoother that 21 is?
Yeah.
And look at where the 21 crosses the 50. That's nice and smooth and clean. Okay.
Oh, yeah.
All right. Then look at where it crosses the 50 again to go long. Yeah, you miss some of it. You miss like that last blue dot up to that cross, the last blue square rather. But when it crosses, you're pretty confident that that's the direction of the trend. Doesn't give you a lot of doubt.
Okay. So
you understand what I'm saying?
Yeah. So it actually crosses right here.
Well, you would use the data window just to be absolutely sure. But
I'm looking at the data window. See.
Oh, you have it. Okay, I see. Yeah. Now, if you scroll back a bit, let's see when that long trade set up. The gray box. Let's see where the cross was in the gray box.
Oh, well, it was right near the end here.
Okay, good. But you see, it does correlate. All right, gives you a nice smooth look.
Okay, yeah, it's right. Wow, this is pretty cool.
Yeah.
So it's right here.
Now, what you would want to do if you wanted to get a little bit faster and give you a little more accuracy, I would change the RSI 21. We'll break it down in smaller increments. We'll make it a 13.
You mean the moving average?
The moving average. I'm sorry. Sorry. The moving average applied to the RSI. We'll make that a 13.
You could almost trade the crossing of the RSI over the moving average there.
Yeah, you absolutely could.
It was above or below the 50, going long or short.
Yeah, there was something called the 1 minute power mountain, I think, that did something similar to that.
Okay, well, let me drag this back a wee bit, and the first cross is.
Oh, you know what you do, Daryl? Right-click on the indicator and make the actual RSI line no color.
Oh, okay. Oh, yeah.
There's another type of cross you could trade with this that I don't want to confuse all that at the moment. So just make it no color. None. Yep. Okay.
Yeah, so this is 49.8. This is the first cross right here. 50.2. And it actually, well, the moving averages on the chart are it's a 21 and
Well, we're not looking at the chart right now. Remember, I said when you want to learn an indicator, imagine that that's all you got. You follow me? Forget all the other lines on the chart. If that was the only indicator you could trade with, and you were locked in a cell, and you couldn't get out of that cell until you developed a winning system using that indicator and that indicator only.
Mm.
Okay, now to show you an example, well, it's going to get a little buggy to do it, but I'll just talk it. You don't have to do it. But let's say you wanted to use, as Tony said, uh, no, that was Michael.
Yeah.
As Michael said, if you could just trade the crosses of the RSI, okay, on that moving average. Then what I would do is put a horizontal line to mark this cross that you're on. And I'll show you, rather than change, go through all the changes and everything, trying to add another RSI. And, we're waiting on the delay here.
Okay, if I ever show my charts again, I'll go over to Alonda chart because they move nice.
Okay.
All right, so there we go.
Yeah. Put a horizontal line. I mean, vertical line is what I meant. I'm sorry, vertical line.
Yeah, that's what you said horizontal, but I read vertical. There we go.
I get dyslexic. Okay, so there. So then we got that. Now that's where we crossed to go long. Now we're going to take the same RSI, and it's a 21 now. Okay, now we're going to make it like a 13.
Okay.
Just make the moving average a 13 is what I meant.
Moving average. Oh.
The moving average on the RSI, no. Make that a 13.
It is a 13.
Oh, I'm looking at the RSI. Oh, make it an 8 then. I want to make it a relatively quick number just to show you something.
Okay.
And I'll use, the other stuff you have on the chart. Let's make it an 8. Okay, didn't quite give me what I wanted. Let's make it a little faster. Let's make it a 5. Now remember that vertical line hasn't changed. And this is how I tweak stuff. You got to go, a couple of digits at a time. That's a 5?
Yeah.
Okay, good. So now we could enter where the 21 RSI crossed, and then exit when the 8 touches or equals the 70, let's say. Put your crosshair on the where the 70 is, where the moving average touches the 70.
Oh, yeah. So right here.
Yeah. Put your crosshair on it so we can see which candle it gets us out.
Okay.
And then we'll go back and do it with a couple of trades.
If I didn't know we'd been on here this long, I would have switched.
That's all right. You gotta go back to where it crosses over.
Well,
where it touches. We're looking for exit, so we just want to touch that 70.
Yeah.
So that's our exit.
70.5. There's 69. 70 right there.
So that's our exit. So so like I said, if that was the only indicator I had, okay, and candlesticks, if that was it, then that's what I would do. I'd use one setting to get me in a trade and use a second setting to get me out. You got me? So now let's go over to where it crosses short again, a little like in that black area of the screen.
All right.
Yeah, and I'm using this 5 as a rough setting. We know the original is a 21, and the 21 did cross over in that area where we are now. Just because of the delay, I don't want to go back and forward and back and forward. You get me?
Yeah.
All right, so that would be our entrance there, where it crossed below the moving average the moving average on RSI crosses below.
Mm-hmm.
And then our exit is when that moving average touches the 30.
Right.
Oh, nice trades.
Go back
Woo.
there.
Yeah.
Yeah,
Yeah.
you got to trust your Uncle Lou on some of this stuff.
Okay. So
Just go
yeah.
where
So
it
that's
touches.
right
Yeah,
over here. Well,
right. You don't get the ultimate bottom, but you get a very, very safe, relatively
Oh, I
risk-free
like the look
trade.
of that.
You got me? Now we
You
go
need,
back to where it crosses over 50 again for the long.
yeah. Yeah. So this fucking thing isn't moving.
Oh yeah, hey, I believe me, I went through it. Welcome to the club. But don't let it.
you need to save this as a template, Daryl.
That wouldn't be a bad idea, Daryl. Oh, and you could add the other RSI if you need to see them both. You're going to have a 21 for your entry and a 5 for your exit. Just for now, the numbers could change as you tweak it a bit. But again, any indicator you throw on the chart, you need to know that indicator inside out and how you could use it as a standalone, because that gives you more power with the indicator.
Yeah, Lou, what were those numbers again? 8 for entry and 21 for exit?
21 for entry and a
Yeah,
5 for exit.
5 for exit, okay.
Yeah.
And what's the MA we've got on there of 13? Smoothed.
Yeah, it's a smooth.
And it's 13 period, yeah?
No. The MA is a 5.
The MA's a 5.
Yeah. Just click on the MA, Daryl, because I jumped
MA's
around.
5. It's a
Yeah.
5.
Okay.
Yeah.
So the RSI is a 21.
Yeah.
Okay. And then we used a I can't remember what it was on the other time frame. The RSI
The
was a
RSI was
21, and I
uh,
think it was a 13 period.
for the moving averages?
Yeah.
For the
RSI we
moving
know was 21, and we're taking a 13. I think it was a 13 for the entry.
13 what for the
The moving average.
on the RSI?
Right. That was for the entry. RSI is set to 21, and I believe we took a 13 period moving average and then took the RSI off.
So in
Okay.
other words, that yellow line in the RSI box is a 13 MA, Daryl, yeah?
No, right
Oh,
now it's a
5.
5.
Oh, so 5.
Yeah,
Okay.
because remember, I used the longer MA as the entry when it crosses 50, and then the shorter MA as the exit when it touches overbought or oversold.
Uh,
But the RSI is 21 on both of them.
Right.
All right. So then on the 21 RSI, we put a 13 period smooth moving average. And then on the exit RSI, we have a 5 period smooth moving average.
Right. Got it.
All right.
Yep.
So now, Daryl, let's go over to because I was going to add the other RSI so you could see them both in tandem, but because of the delay and everything,
Yeah, yeah.
okay, Daryl, what'd you do?
I didn't do anything.
My
Yeah, I'm getting rid of the other chart, and I'm just going to load this one.
All right. So if you want to reload all the indicators and stuff, I'll hang out for a few more minutes,
All right.
and then we'll get it all organized.
So,
Now, did this guy post? He posted all the indicators, obviously, because you have them.
There is only one.
yeah, there's
Okay,
only one.
so could you drop that indicator and your template, Daryl, please, in the room? In
As soon
the,
as I get it set up here.
excuse me?
As soon as I get it set up.
Well, no,
Oh,
this template, the one
oh,
with the original stuff from Forex Factory.
Daryl's one isn't the original.
Oh, this is
Daryl's got
okay,
his own setting.
okay. Well, you know what? Send me this template. Send me Daryl's version of the template anyway, because when I go back to it, at least like to kind of be on the same page. So whatever your template is, Daryl, just
Okay, I'll give you a few different things. Oh, okay, it's
you're going to go to RSI 21. We changed the RSI to a 21, and the reason we
oh,
changed it to a 21 was to smooth out some of the bat ears, I call it.
bat ears. Oh, it's better than bat shit, isn't it?
Yeah, yeah.
Okay,
Now we're going
so
to add the onboard, the
right.
default, what do you call it? Moving average,
Oh, here's
not the
another
custom one.
here's another foible. Look at this stupid thing. I can't get the box to show up back here, so now I got it. It shows up this way. Oh well. I fixed it once before, but I just can't remember how.
Vodka.
Vodka.
Yeah, enough vodka will solve damn near anything, I think.
Okay, so now we're putting a 5 on here for this
No,
onboard.
for the entrance, we're going to use the 13 smooth.
Okay,
I believe that's what it was, 13.
13 smooth. Yeah.
Apply the first indicator's data.
Okay.
All right. So now, yeah, then we see our, and then what we want to do is,
Okay, I'm gonna get fancy here.
all right, you're going to put the 5 on top of that one. Well, it's going to give you different readings because it's going to measure the other indicators' data.
I just want to confuse everybody.
Okay.
Oh shit! I didn't do it the right way. Oh wait a minute, maybe it won't.
You
Oh.
have to then apply it to previous indicators' data. If you're going to put
Oh
2 of
right.
them. First indicators data takes the first one and then apply to previous indicators data.
That may give us a different reading then.
Yeah,
Yeah.
it is because you're taking the data off of that new line we
Okay.
put in.
So
I would just put it in a second sub window.
yeah. Okay. Well,
Just,
let's do it like this for now, and just work with the 13. We'll go through it that way because what
no,
I've got.
just drag the RSI onto the chart again, and it'll make a second window.
Okay, but what you don't understand is I do have tons of data in my history center in this one, so I'm going to start slowing it down
Oh,
even
okay,
more.
okay, okay. All right. So the 13 is our entry.
Okay, so that's going to be like right about here. Let's
Correct.
see. Yeah,
And
yeah.
then the 5, so mark that.
Okay, right here. Enlarge this a little bit. Plus. Um,
And we're kind of just flying, by the seat of our pants here at the moment. If I have a chance, I'll try to really tweak this a bit.
okay, there's that.
Right?
And now let's change this to a 5.
Yes. And that'll give us an exit point. And once I tweak it, I may change to 13 because I don't remember what the original was. We tweaked quite a bit. So we don't have an exit yet.
No, that's because this is real time.
And what's that got to do with it? Yeah, well, we don't have an exit. So
Yeah,
you'd be in this trade and you'd be up quite nicely. And you could have pulled something off in several places along the way.
right. Now, let
And
me.
your stop loss would be at your closest fractal. And you can throw the
Okay, so
fractal on. You can throw
that's
the
right
fractal.
here.
Yeah, okay. That would be your stop.
Okay, so let me. I'm going to put something on here. Okay, and that was the 5. This is the 5. All right, so this is the 5.
Yeah, the 5 is the exit.
All right, so anyways, the 5 here, 45. Come on, come on, come on.
What are you trying to do?
Oh, there's a change. All right, 47. Now this is starting to slow down. 49.
What's your commission on your FXCM? Oh, you're on a Wanda
I-
now. Okay, never mind.
Okay, so I was just comparing. So here would be the entry in the 5. This is the entry on the 13.
The 5 is for exits.
Understood. So why wouldn't you use the 5 for both?
Well, you could, but I prefer using the smoother moving average because you get less of those bat ears, as I like to call them.
Oh, okay. So like here, it dipped below, but it went back above. That's what you're saying, stuff like that, right?
Right, right. If
Okay.
we had a even faster moving average there, that would be a bad air, and it could throw you off a little bit.
Right, right. Okay.
So that's why I prefer the 13 for the entrance. But you could tweak it. You could use them both if you want.
Sure. Okay. Never mind.
But like I said,
So,
if you only had one indicator, this is the way you would learn how to get the most out of that one indicator.
okay. So now, for instance, let's say that this continues, and now it's going to fall. It never did hit 70. So, I mean, there's a couple of different things I can think of right off, and that would be keep trailing up the last 5-point swings, something like that,
Yep.
or use. Okay, so this is the 60 now. I've been working with the 60 for years, and it seems to come into play, even though it's not any magical number like a 55 or whatever. It just seems to work a lot as far as really following price. So, anyways, maybe you could use that as an exit. Although here it would have sucked. So, of course, here also the 5 does a dip below 50, but we're ignoring that. Yeah.
Yeah, I would ignore that because I'm using the 13 as the entry and exit as the entry.
Yeah, that makes less sense. Yeah.
Yeah, and keep in mind you can find a number of different ways to get out of a trade once you're in profit. You know, think about what your daily goal is. Think about if you want to make X percent or certain number of pips or a certain number of dollars.
Yeah, or a margin call.
Yeah, you don't have to ride it all the way to the end.
Okay. Very good. Well, this was enhancing. Unlike the same way they use the word enhance in interrogation. So.
Oh, okay. Yeah, oh, that's quite true. Yeah, there's no pipe wrapped up in newspaper.
Yeah. Okay. So yeah, this would actually turn out to be, in my mind anyway, is a great lesson. I don't know. Maybe everybody else is.
I agree with that. Yeah.
Well, it's good to get a change of pace for me also because I can, kind of use the other part of my experience, I guess you could call it, and just working with indicators and all that. But I
Yeah.
will go back and visit this guy's thread. I still like the other um, way of doing this. This is taking these boxes until you get across back through that other moving average or something. There may be another way to tweak it. But I will read the thread and then, we can come back and touch on this another day.
Yeah, Lou, I've sent you something in your Skype private email, a short YouTube video that I reckon is really worth a watch.
Oh, okay. Wait, let me go find it here. You sent it in which room?
No, not in the room, in your private one. What are you called on there?
Oh, the Pip Factory?
No, Lou Star 1, I think it is, isn't it?
Oh, okay. I don't see it over here.
It's gone through.
Did you say email though?
No.
Oh, Michael.
No.
Oh, no, I'm looking at the wrong thing. Okay. Okay, coiled markets, is that the one?
That's the one. Yeah, yeah.
Okay, I'll take a look at that. Yeah.
The video's not that long.
All right, good enough. This was good. This was actually interesting today.
Yeah.
And all
Whole new
right, and
perspective now.
what's that?
A whole new perspective now,
Yes.
especially with this RSI and the moving average. That's really good.
It's kind of a Carl Dittman trick.
Oh my God! So he did something good.
No, he didn't do anything good, but as I had a bunch of friends decompiled some of his stuff and we started looking at it and all that. He's never done it with RSI, but he would do stuff like take a he'd take a MACD and like when MACD crosses zero, he would create an indicator that showed it as a standalone histogram and call it the super duper whatever. And there's nothing but MACD with the histogram. I mean, that's the type of stuff that he's done quite often.
Yeah, that guy knows how to curve fit. There's no doubt about that.
Oh yeah, oh please, he's a master at it. All right, gents, I will say so long for now. And tomorrow, same time, same place.
Look forward to it, Lou. Thanks.
All right.
Yeah, thanks, Lou. Very good.
Be well,
Cheers.
everybody. Bye bye.
Yep, thanks.